Also, of course, it's earnings season. They're in full force right now, and it's really helping to drive this market higher. Now, we're talking despite headwinds from trade and growth concerns and all these other things. Coming into the week, I actually believe we're in the midst of a massive technical breakout. For the Dow, my magic number was 24,450. For the S&P, 2,600, up to 2,800. And if we get through that, I say here we come to all-time highs. But let's talk to someone who does this for a living, the technical side. Her magic numbers, the optimal capital directive strategy. Frances Newton Stacy, thanks for joining us.
Thank you, Charles.
All right, I gave you my numbers, okay?
Yes.
How far off am I?
No, I think you're very close.
Okay.
My calculations are slightly different. The Dow has to put 25,000 in the rearview mirror. That is huge resistance. And it used to come from actually the floor traders who used to trade those big round numbers. But all the computer algorithms have since been sort of programmed with those numbers because they were significant historically. But 25,000 in the rearview mirror for the Dow, if it closes above 24,375, you've got a really good chance of
If we close above
that.
the 25,000 on a Dow, can I break out my Dow 27,000 hat? Can I start dusting it off?
I think it's a pretty good sign if it can hold the 25,000 on the close.
So you got to break through it and then be tested a few times on the downside.
And then you got to hold it, and then 25,781, I think you can break out your real hat.
So we've had an amazing run. We had the worst December since 1931. We had the quickest rebound of $1 trillion in value into the market in the history of the market. So you have these two opposing narratives, and you're watching this, and then all of a sudden the tensions, right? Even though we had a pretty volatile day yesterday, it wasn't like the ones we were seeing in December. Is there anything you're seeing that gives you the little nuances right now that might give us a glimpse of what's going to happen?
Totally. So I'm looking to see what news that the market is a little agnostic about. So some of the earnings, even though some of them have come in a little under expectations, some of them are over expectations, you're just not seeing a lot of movement or volatility based on that. But the Fed seems to be the thing that everybody cares about the most. And
but that's sort of out of the way for now, isn't it? It's
out of the way probably until March, yes.
The earnings, even companies I'm seeing the last week that have guided so-so have gone up. Some of these stocks have gone up. Is that sort of a reflection of this whisper? There's always, you speak of old school, right? The old round numbers. Back in the old days, there was always this sort of whisper thing, a real number, the official number, but what we thought, right? We thought the semis were going to guide much lower. We thought the airlines were going to guide much lower, and they haven't. And those are pretty easy hurdles if you can clear them to clear.
That's true. So what happens is the Fed is draining money out of the system with the balance sheet, right?
Right.
And so far, they've been doing it at about approximately the rate of $25 billion per month. This year, they have said that they're going to do $50 billion per month, right? And so as you drain money out of the system, as you drain liquidity out of the system, which is what happens when you take that money off of the balance sheet, you just get a few more winners and losers, right? So in 2017, everything was a winner. You could just throw your dart and wherever it hit on the board. And so now you're seeing that in earnings, it's reflected that there are some winners and some losers. And it's going to be interesting to see who sort of stays afloat and who struggles.
Well, we appreciate it, Frances. A lot of people are trading big money off of the technicals, and we appreciate you sharing your expertise with us. Thank you very much.
Thank you, Charles.